Good evening, guys. Ken of Tortoise Capital, the nightly strategy podcast for March 31st, 2020. So I want to jump right into a case study in UDOW. So we talked yesterday about UDOW and why 44.20 or 44.30, this solid blue line, was so crucial. That's the price level that we need to see today for this to be an owl entry, in which case we have reasons to believe that a $12 move to the upside could still be possible. So this vertical blue line is the open, and what I just noticed here was these three yellow dots. Here was the belly of the dragon, so I'm going to draw a red line all the way across. The hump of the dragon yesterday, where it closed very, very well. The peak of that dragon is that blue line and the yellow dot. And then the VWAP yesterday was down here around 42.40. That was also the Z3 excursion at the close. So you had a Z3 that was off the chart up top. So you almost have this little triangle thing going on. And then today there was a gap up. I should probably draw that as a so you can see the cursor. Stand by. So we had the gap open right here, and you notice that that's where the VWAP is. So I like to wait about 10 or 15 minutes. So we're waiting 15 minutes here, and in that time, all this price action has just happened right here. So you have the RL 270 and the VWAP all in agreement. You had the PSAR stopped right here as it started to, it had gapped down. I'm sorry, to gap down a little bit. So the PSAR stops up here, and then it comes down. So right about 15 minutes in, you got this convergence of the PSAR, the Dragon, the VWAP, the RL10, and the 30 are all tightly clustered inside here. Because of all this price action from yesterday, the river is still up in here, but for right now, you have this tight region. So I would be, at this point, about 15 minutes in, we've had this bottoming action. It didn't fail through the previous belly of the dragon. It tested it a couple times, but it never got across. See, the Bollinger Bands are converging, and now everything is in this tightly clustered little acorn of potential. So I'm ready to buy this thing if it gets north of, looks like 43.85. In other words, cross the Bollinger Band main. It's already been threatening the PSAR, but still the RL10 is rolling over and it's underneath the PSAR. So I'm ready to buy it if it goes above there. When it crosses my little red line, that's the collapsing dragon. So I'm not buying this thing. I'm taking a collapsing dragon right there, and the price that would now convince me that this thing is wrong is where you see I've drawn that yellow box, and that's basically the PSAR. So that's my trade frame right from there. I'm short at the red dot. Got a little bit of price action in my favor. This lower blue line down here is where, if that violates, that would have violated the previous day's closing Z3, would have violated yesterday's VWAP, and this is where I would add a second position if I were going to add a second position, right? So it's kind of tactical play inside here, but this is really a big vote in the other direction. North of this green line would be a vote in the long direction, okay? Let's come back to my entry. It's still oscillating around. By this time here, I've decided to take that. Let's see if that'll. because it's made one reversal effort, and then a second it didn't come down and violate that blue line. It came down and touched and starts to go back north. And I've got about, let's see what we have here. Whoop, wrong thing. So I'm short at 43.05, and it got as low as 42.40, so that's like a 65 or 70 cent move on a about a 40 cent risk. So this was already 1.5 R of execution, and now it is coming back for the second time. So I just said, let me get an R. Let me get an execution R out of that. I like to start the day getting paid. And now it gives me a 1, 2, 3 entry, and everything else in the market is stabilized and holding up well. So now I'm going to get long here at like 42.90, and then my stop is going to be down here below the belly of the 10, 42.60. I don't mind if you go all the way to here, 42.40. So call it 50 cents. If you take the blue line, that's 50 cents. Nothing wrong with that. PSAR flip, that's a favorable thing. And now you notice the, I should really make that yellow, I guess. Now that we're 30 minutes into the day, the gap is gone, and now all the price look back period is starting from the open. So all the gap is now gone. So now we got a PSAR flip to the upside. That's a favorable thing. The RL10 has crossed the price where I got short. The RL10 just crossed that. It crossed the Bollinger Band mean. It's getting ready to cross the VWAP. And it's testing what was resistance yesterday. Yesterday, when it was at that price level, the buyers pushed it in a hurry up there. So this is all favorable signs. The RL10 crosses the VWAP, which is flattening out, and getting ready to cross the RL270. That's favorable. So I buy a second position. If my stop is here at the red line, then I'm at net zero on that trade. I don't mind the PSAR stop there, though. Now it has cleared this box, which is higher than the hump of the dragon over here. So I want you to notice that this was that hump of the dragon, and now this price has cleared above that and is now out of this little box. So that's a good thing. When it so it dips and then immediately reverses and comes out of the box again, I said, give me a third one. I'll take a third position now. So at this point, if I make this my stop, sorry, let me make that. If I make that my stop, I've got 1 R in hand from the first trade. I have maybe 2 execution R's in hand if this red line gets hit. So that's pretty favorable. And now I want you to realize that I still have, based on the discussion we had yesterday about the strategy, that if it gets above this blue line here, that's where that thing really is going to take off. So at this point, I'm not going to lose any money on that trade. So I can now take a look at this and say, the low of the day was here, was 42.40. If I add $12 to that, that's the range stat. This thing could get to 54 to the upside. So I'm liking it. This is about where I want to add a fourth position. And it takes right off. It goes through that blue line. That's a fourth position. This is where I want to add a fifth position. So I've built this little price ladder. Now I feel really good. Now my stop is probably like right about here. And at this point, I don't even mind if it's here, like this. So I'm just slightly above my entry on the fourth position long. And that's where I now move that stop to here. So I got 1, 2, 3, 4, 5. So on the previous one, I had 4 positions in, 1, 2, 3, 4, and I was getting ready to put that fifth position in here at 44.72. So my stop is already here. And if it gets through that blue line, I'm going to add my position up here and then figure out how fast I can get my stop above that. Meanwhile, all of those are locking in the gains from the previous three positions. So in my mind now, I've got 1, 2, 3, 4, 5. I've already prepared my sixth position, which would be if it takes out these previous 2 Z3 excursions. Then you can see all of that price action from yesterday would have been negated. And that yesterday was a good move. So if it can get above here and go, then this could, again, go to 54. And we're talking about a price at 45, and I've already got 5 positions in hand, and the fifth position is at no lose. Okay, range is 53. On a 50-cent risk. So my original entry was down here at 42.90, and we're now at 44.90 essentially. So we're $2 on 50-cent risk on the first position. So that's probably like 4R, 3R, 2R, and 1. So we're somewhere around, 9 or 10R in hand at this point. So I'm feeling pretty good. And all out. So like I said, I had already committed that if that thing was going to get out, it was going to take off that whole stack. Because the last 2 times that it got to a price in this area and then rolled over, what you had was collapse. So I got 10 or 11R in hand. So the capture on this one, the first position captured $2.10, $1.40, $1.40, and then this was essentially a scratch. Plus, so that's 10 execution hours, plus this one is 11-ish, and we're an hour into the day. We know that this could be the low of the day, or that could be the high of the day, since we're an hour in. Meanwhile, Mexico. Same setup, hybrid frog kind of a deal. I had it opened. Here's where it opened. It had a gap up. This was the peak of the RL10. Then there's a P1 across the VWAP, PSAR flip here, and that's the peak of the 30. And this is the belly of the RL10 and the Dragon. So this is, again, about half an hour in. This is the working low of the day. That's the working high of the day. I see that it has bottomed up. I got a P1. I got a PSAR flip. It comes out of the river. I just buy it with so I'm long at 28.15. Stop at execution stop 27.85. So that's a 30-cent risk. That's about 1%. It takes out the previous hump of the 10 and 30. Clears the Z3. I should draw that as a... So here I buy the second position because it's cleared the previous Z3, the RL30, and the RL10 hump, and it's deep in the first position's already in the money. Gets to the peak, holds. Now it just mucks around. Now we get a sideways quiet channel. Now you can see the RL90 is still up. The RL270 crosses the VWAP right here. That's a favorable sign. You see the Z3 lines have pinched. And now this thing, instead of failing back to the VWAP, it takes out the Z3. So I buy a third position on a Z3 breakout, and I just lock in my my stop here right underneath the PSAR of that one. So what we've gained is, you can think of that third position as being paid for by the market's money from those two positions. And now the third one is justified, and we got a tight stop. And even by this point, I can probably raise that stop up into here, to the confluence of the 270 and the Bollinger Band mean, and just decide, well, I'll let it decide. Well, you decide what we're going to do here. Next one up was UDOW. So this, where's our? Let me get my good cursor in here. So this was that first one we looked at that netted 11R. I was trading EWW and US Steel at the time, and I was still digesting this. Made a high, held the support level where the previous belly of the dragon and the RL10 were, which was also the peak of the previous one. So it's not unusual to see that what was once resistance is now support, and now I notice this. I'm stalking it in this entire period. I see a low that held at the VWAP, a higher low, and now I'm in this position right here in the blue light. And I like, there's three rising lows. I like, in the fact that I was able to carry over from previous, the previous trade geometry, that I had already framed the additional entries where I would add. So at previous Z3 excursions. So this one at the yellow dot would be, if it gets above this Z3 excursion, and the hump of the 10 and the 90 and the hump of the 10 and the PSAR flip, and you can see it's the Z3 is pinched and starting to expand. So at this point, I've mapped out all of these places where the previous Z3 excursions are going to be logical places for me to add positions, because that's indicative of psychological gains. That way back when price was at this level and it had just had that nice run, it would have had to have gotten above 46 for it to feel like new enthusiasm coming into the market, right? So that, when I carry that forward, that just gives me some logical place based on geometry, I guess you would say, to place additional price levels. So at the yellow dot, I just say to myself, if it broke out above that Z3 line, I'd want to buy it there. So why don't I just buy it here at the green line and have that tight stop at the PSAR? And now I only have I have my 40 cent risk from here to there, instead of an 80 cent risk if I were to buy it out here. Because if I buy it here at the yellow dot, the PSAR flip is probably still my stop, unless I decide to use, the belly of the dragon or the Z-1. So I actually don't mind this green line, because if this works, then I just got a better price, and if it fails, I only lose half as much money. And now, by this time, it gets one little surge up, comes back, holds support, and is getting ready to take off again. So I'm getting ready to add new positions here on this price ladder as it goes up. So now I feel like I'm probably going to get a couple more R out of that one. So this is the continuation play off the original win of this morning. Like I said, during this period of time here, when the index, which needs time to digest, it just swallowed it's like a big snake that just swallowed a cow, an 11R cow. It needs time to digest that. And now I think, though, it's maybe ready to wake up and start going and climbing the ladder again. And then the size of this move could be the size of this move, which went from 42.40 to 44.80, so 250. So if it goes that far again this time, that could get it well above 47 on its way to 53. So that's the way I played UDOW on the second leg. This one was U.S. Steel X. So we've been having a love-love relationship with this one all the way. So all morning it was a little gap up, and then all morning it was in a pretty tight range, and our swing trade was just working. Then it got into a sideways quiet channel, and this is a super pinch because both Z3 lines are within one frog box. It's like 15 cents from Z3 to Z3. And you've got price, the Dragon, the RL10, the 30, the 90, and the 270, all in the VWAP, all tightly compressed. And when that thing releases, that's what it does. So I buy the Z3 breakout. I notice right here that the RL10 peaks, pulls back, and starts to take off again. I notice that the PSAR held. It's above a rising VWAP, and that this breakout from here is already past the two previous Z3 excursions. So I buy the second position. It moves up, pulls back. It's the same kind of deal, holds, and then takes off again. So I buy the third position.